Welcome everyone to the Kendall Report. Don't forget to subscribe and hit that like button. And we're running low on likes lately, folks, so ante up. It's a small favor to ask. Anyway, this is going to be a quick broadcast tonight because there's really not much to talk about. We did see continued follow through on the downside with the S&P down 1%. NASDAQ was flashing green off and on all day. Finished down 0.6. The Russell down 1.41. Overnight now, we're basically taking everything off the table that we had yesterday. Just look here at the futures on the Dow Jones up 172, E-minis up 22, the NASDAQ futures up 75, up 0.67. So basically, they just removed it. We were in the live trading room today, and it was interesting watching the last hour because it looked like there was going to be a squeeze. They were going to test the 3,700 level, and then it rallied to 97 and then just fell apart. And it looks like those same, the buyers came back in to buy this thing back up. And I was talking about this, and I'll just mention this as we get into tonight's video, is you have to watch the action in both ways. When the markets are going up and they get to these even numbers, to what's called the figure 37, 38, 39, so forth. When you get to those numbers, in this case, we've been going down below the numbers. If you think about when we went down to 3,900, we ended up going down to around 38.60, bounced to 39 and change again, 39.20, 39.30, and then it sell off, and then we went to 3,700, and we bounced around there a little bit, then down to 3,600, and of course I'll talk about it in the technicals, the key 36, and that's on the cash markets. But what I'm trying to say here is we're getting these same type of actions around each one of these things. I was flashing back to when we were rallying, going back almost every time, more so in the previous era of lower volatility. The old days, a 14 handle day was about the max that it would go, between 14, 17 handles. A lot of days they were around 10 or 12. And now we're looking at, 100-point S&P days. And I realize the price levels are different and percentage changes are different. And that has everything to do with what the prices look like. But on the way up, we had the opposite happen. We'd trade above the market, we'd fall back into the previous handle and consolidate, and then it would ebb up on each level. And we're seeing the opposite on the downside. Now we're coming into a pretty critical week, as I talked about last night. We're looking at the quarterly rebalancing likely to show up. Maybe we're seeing a little bit of that starting already. And of course, somebody mentioned the inverse Kramer indicator in the live room today. Kramer thinks the June lows won't hold, so the inverse is to think it will. But I don't think, as I mentioned last night, I went through a lot of details. So if you missed last night's video and you're new here, go watch last night's video. We have it marked so you can just watch the section on the S&P. I went through a lot of depth on quarterly, monthly, a lot of key elements there and metrics that you're going to want to pay attention to. But as we look at what's going on here as far as the patterns go, it's possible, and the title of this video is, will the selling abate? And I think it will. Of course, the nickname is Turnaround Tuesday, but there's something more going on here, and I'll show you in the technicals. The PPMs turned up, and I think that is setting the tone for a little bit of a rebound. And we really don't have any, I'll go through this in a minute, we don't really have any material economic news or anything coming out that's going to be earth-shocking. So let's go ahead and get through that, and I'll cover all the interest rate stuff when we get to that section so I can get through tonight fairly quickly. So yesterday we had durable goods. We have durable goods tomorrow coming out, expected to be minus 0.1. This is for Tuesday. FHA prices on houses, I'm looking at minus 0.2. I've seen numbers range of -2 to +2. I think the housing prices are going to continue to be under pressure, and consumer confidence is at 105. You know, this is some of these metrics, and I are just really not very reliable. I'm not sure they mean anything, and more importantly, I'm not sure anyone's paying attention to them right now. But we certainly have had a substantial sell-off all the way down to retest the June lows. And like I said, watch last night's video for a lot of details. Let's go ahead and get into the database, cover that, and get right through tonight's video. I think we'll be able to get out of here in or around 30 minutes. So here we go. We had another 728 sell signals, 49 buy signals. The percent bullish now has dropped to 7.10. So we're basically bottomed out. When I did the video a couple of days ago, full liquidation mode, it was pretty obvious we were still around 28% bullish, that everything was going to get blown out. And that's where we are. On an intermediate basis, we're around 27% bullish. So only 3 out of 10 symbols in our database, which is 16,030 symbols, are currently long. On the short-term database, on the daily, there's only 1,138 symbols. There's virtually nothing that's out there that's working. And so there's no trends out there on a short-term level. Everything has moved to a neutral phase, which then sets up for some of the patterns that I'll talk to you about tonight as far as the technicals go. So let's just get right through this thing tonight, because there's really no story here at all. Okay, so we'll go through the S&P. It's interesting because this is the 12th day down since we made the high, the big reversal. And you see the PPMs over here, they've flipped up substantially. And while this doesn't mean there's any big rally, they're still down 0.66, 0.46, 0.27. These are all trend mode down. It just tells us that we're starting to at least get some of the downward momentum to flatten out a little bit. But so we could see anywhere from 2 to 3 days up. And I believe as we come into the end of the week, we'll have to see whether or not the 36 number, which is a cash number, and we're looking at the futures right now, is a cash number, whether that's going to hold or not. If we hold it, that's fine. Doesn't really have any significance as we go forward. The patterns that set up both on a daily and weekly will be key to understanding what is likely to happen next. Looking at the market grid for Tuesday, 3691 is, while we're talking, we printed up to 3700, but 3691 is R1, R2, 3714. So watch that number pretty close for a pivot. If we can get above that, 3714, there could be 3740, 3737 is R3. On the downside, we've had a low so far of 63, and S1 is 49. And you see here, again, this is very similar numbers to yesterday, because we're in this box formation I talk about on the market grid, where it just goes flat. If I look back at yesterday, you'll see that 26 was S3. Today, and we look at S3 and S2 is 25. So these numbers end up being correlated based on how the patterns are setting up. But we're definitely looking at the potential. S1 would be the worst case. If we do break through that, then we're going for S2, which means we're going to challenge the 36 lows that are out there. So, and like I said, I don't see the significance of penetrating right now or not. I don't see it that critical that it has to do it by the end of the month, or that there's any change in the intermediate or longer term patterns that are out there. Quickly, well, let's take I just want to take a glance. I'll do most of the work on the S&P. We're starting to see on a weekly basis, I talked about we're in big downtrends here as well. The 35.58 is the 200-week moving average, and we're just looking at the market grid for this week. 36.46 is S1. R1 is 37.71. So I would think, depending on how we trade in the next couple of days, S1, R1 on a weekly basis is what we're likely to see here. We could see an extension. You can see above R1 would be the R2 number is 38.40. So these numbers start to get pretty big. And on the inverse, if we take out 36.46, next number 35.70. So there's lots of potential volatility this week. So we'll watch the dailies to try to pick up on them. As I just said, look for S1, R1 with a possibility on a daily going to R2. I just want to bring up something I think will be helpful. Is also we're getting a crossover of the 10 and 21 period moving averages on the monthly. And typically what this sets up, a lot of people think this is a negative cross. I see it more as a positive. It usually puts us into some sort of, we'll just say, large sideways range here. And I want to draw something in real quick just to put this together. I'm sorry, my tool is not available. Just hang on 1 second here. Bear with me. Okay, so here's what I want to show you that is going on here with this pattern. Is we have this green line, which is the 40. That angle is right here. That is tied to the ppm3. We're through the first second derivative, but we still have that upslope. And typically what's going to happen, we get the 21 coming in here, and I'll just color code these a bit. The 10 period is coming through over here, is crossing through. And typically what happens is that sets up a range for the market to stay, I'm going to box this out, but to end up in a trading range. And so this could be something that lasts for multiple months, and it could be maybe just for this coming month. We're going to get when we come in on Sunday night and I do my Sunday night video, we'll be able to see exactly what the market grid is doing for the next month, whether it turns down or up. It's going to be a reasonable event. But these, I'll just draw in here as far as the other patterns that are here. We're just looking here at the ppms. You see pretty drastic moves down. So there's a lot of downward pressure, and that 10 period moving average as we come through into October is going to be a significant point. I'll be talking about it when that occurs. All right, next we'll look at the NASDAQ. We'll go to the daily. Daily NASDAQ, same pattern, 12 days down, PPM's turning up pretty substantially. We're still negative 0.60, 0.46, 0.31 PPM 1, 2, and 3. And all this is telling us that we're going to flatten out. Also, let me expand this pattern just a little bit so you can see it. As you'll see how the market grid has flattened out. There's a slight upward tilt on the bottom side, but this typically will suggest that we'll stay in this sideways range. We're looking at R2 today as 472. We've had a high of 422, so we've already printed basically an R2 on the downside, 12,298. So we're a bit above the S1. So S1, R2 are already a given, and what I'm looking at is the potential for an R3 here, which would be 11,555 on this pattern. All right, so next we'll go through the RTY. Same pattern again, 12 days down, PPM's turning up, all of that. We actually almost satisfied the fib targets to the downside. We get the low here. The low is 16,660. The targets in the downside was low target 2 was 1665. So those of you that have the indicators know that price. So we came right into that area there. And so it looks like to me we probably satisfied at least the first level Fibonacci target here. And most likely, like I was just saying, we're going to get a slight rebound here, possibility of getting into more of a consolidation pattern here than the collapse probably everybody that owns those puts out there are expecting them to be. So the point is that it looks like to me, just going to the monthly charts, I'll cover this over the next several days. The key thing to look at on all of these charts, if we take out S1 on the S&P, NASDAQ, or on the Russell, we're going to go down to S2, which will trigger something further, because let's just talk S&P here for a second. The S&P will actually, that would trigger a new low from June. Whether there's follow through selling or not, we won't know until we get there. But that's how critical today is on Tuesday, is that if that level, this S1 level doesn't hold, then we could see some follow through. And what we've been seeing is nights like this or overnight sessions, we come in stronger in the morning, sellers come in and knock the market down. Is that pattern going to change? We'll find out tomorrow, but that has been the pattern. So higher openings, you sell. And we haven't really had the lower openings. We've continued to get this same kind of action. And one of the things I just want to talk just for a minute about is that it's important for you to pay attention to how these markets are acting at these levels, so you can start to figure out some of these patterns that are setting up. And once you do, you should be able to determine these moves from the inside of the market grid. So once again, the folks that have the market grid at your fingertips on TradingView, you can just go ahead and watch these numbers very closely and get those pivots so that you know exactly what's likely to occur. All right, crazy time now for the 10-year. We're looking at the 10-year once again, printed all the way to 3.904. So just over 3.9. We finished at 3.878, basically pinned on a ceiling. I'll show you on the weekly chart, we're printing the RXT level just about. I think it's 92. going off memory. I'll bring that up in a second, but we're seeing this crazy acceleration to the upside. Now, the 2-year today printed 431, which was even crazier. So for whatever reason, the selling is all coming into the 2-year securities, and whether that has something to do with the QT and the unwinds, that's difficult to tell. I've been trying to see where the selling is the heaviest and where maybe the Fed is letting the runoff happen. So just real quick here while we're looking at this, is one of the things the Fed has the option to do is to determine which part of the balance sheet is being run off, what duration, all of those things, which are going to affect yield curve and other things. So they're not just letting it run off randomly. That's not how it works. They're actually looking at different securities, letting those run off and others not. I don't think it's this perfectly symmetrical runoff that's happening. Typically, they want to try to do something with the yield curve, and they have the ability to do that. So it looks like there's an awful lot of selling coming in on the 2-year. And in the live room today, and I went through it the other night, where I think the yield curve is going to be. I'll continue to review that. But basically, if the Fed would have done what they should have done last week, they would have raised yields 1.5%. Maybe 1 3/4 would have been the best raise. They would have just got Fed funds up into the 4 handle and had this thing over and done. Why they feel like they have to go incremental. The result is, as always, and I've talked about this before, for many years we watched the tail wag the dog. Now the dog is wagging the tail. And what that means is that the markets, the actual interest rate markets and the real markets, are driving the Fed, pushing these yields. So just do it and get it over with. And then the market can start to really consolidate, maybe take some things the other way. And I'll just go off on this just for a minute more, is that one of the things that is likely to happen here is that this inversion in the yield curve will become more pronounced with the longest maturity, the 30-year that everybody watches, compared to the Fed funds being the lowest of everything in the curve. And it's basically there now. That part is already there. The 30-year right now is 370. We're 387 on the 5-year, and we're looking at the 13-week is only at 316. And the only reason why it's not higher is because the Fed not pushing that front end higher right away. Why they are being hesitant, I have no idea. And I saw one of the Fed, I saw a little clip that on Bloomberg this afternoon that I think I'm going to mispronounce her name, but like Meister or whatever her name is. She was talking about, we're going to use our tools and we're going to get to our 2% inflation. I mean, it's just such crazy rhetoric, and it's amazing that these people even get invited to talk in front of groups. Because I mentioned again, I'll just state it, I talked about it last week, is there wasn't one person on the Fed that had their dot plots a year out that had anything over 0.75 yield. Nobody saw that. We're at 3.25 1 year out. And so I've been joking around with folks, and instead of calling them dot plots, I'm calling them dart plots. They're just throwing darts, and wherever they land is where the market's going. And the reality is they don't have a clue. They should really do their job and just raise the rates, get this yield curve positioned like it is, destroy the demand, and get it over with. What's interesting, as we know, the labor markets, I'll just go on here for a second, the labor markets are solid, and all of those things are, those metrics all look so good. It's like, how could that be happening with and destroy the demand? And I think primarily housing and bigger ticket items are going to get hit. So that, I think it's a little early, but looking at durable goods and those kind of orders to see what they come out. If they come in a little weaker, maybe there's a sign there. But those are the things, metrics we're going to have to follow to try to figure out what's going on. And like I said, trying to figure out where the runoff's happening, where are they allowing the runoff to be imbalanced to, because they're always doing this. They're never just letting it run off evenly, like it's just a tub of water and it's going over the edge and they're going to let it roll. So we'll have to just keep a watch on what they're doing there. So next we'll go to crude. Crude continues to be under the 80 handle, which is absolutely amazing. Although we're at 0.40, all these markets are getting a little bit of a bid in them. Let me change the scale just a little bit so it's a little easier to see. Do have some fib targets on the downside, 73.28, fib target 1. So far we've been 76.20. Let me get the right number. Yeah, 76.25 yesterday. So maybe we can hold a 73 handle. Below that, it gets real ugly fast. We're looking at 67 and 63. The PPMs are still accelerating down. We're minus 0.109 and minus 0.47 on PPM 1 and 2. So we definitely have the big downtrend going. There's not really anything that is pointing to a major turnaround in prices or anything of that sort. As you know, I've been talking about for a while that I thought we'd have an 82, 92. That would be the trading range. Well, that broke down, and now we're just continuing to see the market deteriorate. And it may be that even expectations being built in the markets, or it's actually happening where there's demand destruction is already starting to show up here in crude oil. And we'll see if there's some stability, but that fib target on the downside looks very, very probable at 73. I said we wouldn't get into 80. We got into 70 handle, and we did that. I'm going to tell you, I don't think we're going to get under 70, but we have fib targets right now at the downward target 67 and 63. So we certainly have the targets. And I remember talking about the US dollar when it was 94, talking about it going to 110 to 114. There was objectives there, and that seemed crazy too. And that's what we're doing. And a lot of this, what we're seeing here is the dollar starting to weaken a little bit. We saw just to tie all this together, because it is related, is that the currencies are still under pressure. We saw the pound, I think, print down to 103 and change. The renminbi, Chinese currency, is 715 plus in tonight's fix. So there's plenty of dollar still running hard out there. So the fact that on the index, this index here, DXY, is, I think, 40% roughly is the euro. So this is more of a real euro-weighted index that we're looking at. But you start to look at some of these other currencies, and you're seeing those continue carnage there. I think the yen, the last time I looked, yeah, the yen is up a little bit, so it's stabilized. I went through that last night. Next, we'll do gold. Gold continues to decline. Yesterday was pretty downward pressure, 1627. The low target 2 here is 1636, so we went through that. The extreme target on the downside right now is 1617. This is just on a daily chart. I'll flip over to the weekly here, and gold is just having lots of issues. And I've been talking about gold should be at 1550. Well, fib target 2 here, well, fib target 1, let's go before we skip forward, is 1620 on the weekly. Through the next level below that is 1542, and all the way down to 1500 handle, 1494. So there's plenty of downside. All of a sudden, that PPM 1 that was starting to look like maybe it was going to turn has flipped and rolled over, and that's not a good sign if you're a gold bull. This is definitely continuing to see the downside unfold. Finally, we'll cover Bitcoin. We get this pattern up here so you can see it a little bit better. And what we're looking at here is a continuing pattern of holding, defying gravity, if you will. PPM's trying to stabilize. We're still negative here, but we got down to the 18,188. I talked about the 18,555 level. We printed through that, and they bottom up again. And here we are back at 19.7, trying to print 20,000 again. The resistance really not until 21.2, and then ultimately there's major, I'll just call it a cap on this market between 21 and 22. That may be where we get more of a reaction, but right now we're just stable, continuing to stay above this. We're just going to round it off and say 18,000 handle. I showed you the numbers. There's some short-term targets for 16,600, and those are valid. We're just seeing that markets stay stable, and with this correlation that everybody talks about with the NASDAQ, and the NASDAQ's now up 0.74, so it's rallied a little bit more since we covered it a few minutes ago. But like I said, there's plenty of resistance between the 21, we'll just round some numbers off here, 21.2 all the way to 23, but I think that number is really 22.5 is major resistance there. Okay, folks, as promised, it's about 36 minutes in. That's including waiting for me to come live. So we're about 30 minutes in here. I appreciate everybody watching. Make sure you hit that subscribe button, hit the like button before you leave. Appreciate it. And I really feel like the next couple of days are going to be critical. We'll probably see some rebound, as I talked about earlier. Thanks again for watching, and we'll talk to you tomorrow night, same time.